What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you so much for joining me today. What I have in line for you on this video is price action simplified. For those beginners out there, or those who just want another retest on or taster on how to identify price action, this is the video for you. So without further ado, I'll see you over on the chart and we'll get straight into this video. Let's go. Okay, over on the chart, what I want to refresh for everyone or teach you if you're new is how we like to see clean price action. We know that price moves up and we know that price moves down. But what we want to do is learn when we should be entering into trades. So if we're looking at an uptrend, we know that price moves up, then it has what's called a pullback, and then a continuation to the upside. In doing so, it forms a lower high and a higher low. We always want to make sure that we are trading with the trend, never against it. The reason being, we are increasing our probability of winning that trade. So we've identified that the market is moving nice and cleanly to the upside, and we've had this lower high now being formed. We then want to see price do what it did in the second phase here and come for that pullback and retest the previous high. So what we should see is price come back for this retest and then continue to the upside and then do exactly the same once more. Therefore, making a further area of support here from this area of resistance. And as a competent trader, and we want to make the biggest return on our investment into the Forex market, we want to enter our trade at the retest of the previous area of resistance. And we can do it time and time again, and it is the main reason that we will become profitable in this market. The difficulties are finding when the market is going to end its pullback. If we can identify when the market has finished making the pullback, we can then enter our trades on a very clean and concise basis to maximize our success rate in this game. How we identify that is based on what the candlestick formations are telling us. Now that we know how a very simple chart moves, we'll go and look shortly onto the live market. What I will say is, for those of you who are beginners, we don't want to trade in charts that are doing something like this. You get the gist. This is what's called a sideways moving market. And a sideways moving market is very unpredictable. You may think it's predictable, it comes up again to the high, goes back to the low, goes up to the high, and so on. But what can happen at any point is price can move very quickly to the upside or very quickly to the downside. And there's really no way of telling that. Price is consolidating, trying to find which direction it wants to move in. So we want to avoid taking any trades that do exactly that. So looking now onto the live market, let's put what we've learned into perspective. So we are trading here Australian dollar JPY. It's a pair that I love. It follows market structure almost to the T. In doing so, it allows us to predict quite cleanly and quite concisely where the market is going to find resistance. On the chart here, you can see that the market was moving sideways for a very long period of time. There's no clear, concise structure. Again, we want to see price make a high, a higher low, a higher high, a higher low, and so on. We don't see that here. It's moving sideways until we get round here. And then round here, what we see is price smashing through this area of support. Why is it an area of support? Once, twice, 3 times, 4 times, price respected this level until finally it broke through and continued to the downside. So we are now in a downtrend. So what we want to see is something like this. And we want to enter our trade, it's a little bit wonky, apologies, on this retest of the area of resistance. So price smashed through, had a strong impulse to the downside. Fantastic. This tells us that the bears are in the market and we are plummeting that price downwards. Then we have the impulse to the upside and it continues for some time. If you want to know more about it and you're ready to move on to the next part of price action, I'll leave a link below to my Fibonacci retracement lesson in which you will learn more about it. Before I continue and show you why we now enter the trade, I'd be grateful if you could smash that like button, hit the subscribe and leave a comment below telling me why you liked this video and if you are also a price action master. That being said, let's continue. So we notice now that we're in the downtrend. We've had this pullback. What we want to see now is we want to see price exhaust and then continue to the downside. The most simplest way of finding out how price has exhausted is by the candle formations and the candle patterns that it's printing. Quite clearly we can see here that the size of the green candle is depleting with every printed one. We are also getting wick rejections at this area. Now that tells us that the bulls who are in the market pushing price up are now dwindling away. They've closed their positions, they've made their profit from the push to this upside, and they're dwindling away. Therefore, there'll be people like you and I waiting for this retest, having sell orders in place for the market then to push to the downside. So upon looking at this and we can see there's wick rejections, this is a fantastic sign that the market is going to continue to the downside. So what we do is we put a sell order in. We want our stop loss just above the structure for a nice 1 to 3. So now we've identified that the market's in a downtrend, we've identified our pullback, and our pullback has ceased to become a pullback with this wick rejections. We can now look to trade. Now some of you may be saying, well Lucas, here's some wick rejections, why was this not the area where the pullback ended? And that's very simple, we are not at the key level. The key level, as we identified, was based on looking left and seeing where price respected previously. Twice here, if you want a third time and a fourth time. This is the key level, this is not a key level, this is just price movement. We've entered in, or we've got a market order or pending order, however you would do it. Let's see what would have happened. Okay, we're in the trade. And there we go. Nice and easy, 1 to 3, risk to reward, take profit over a number of days, or a day or two, and we're out there. There's our week's trade done. How many pips did we take there? 90 pips. If you had a trailing stop and you wanted to see how far this was going to go, you obviously couldn't see how far you'd get with it. Now let's find another example on the chart and to highlight my point further. So we'll see you in a second. Okay traders, second example. What we want to do first, if this was a live market, is identify where those key levels are. Straight away we see, and it hasn't got to be exact because price movement is never to the pip, is we see that this area has been respected multiple times. We've had huge wick rejections here, a wick rejection here, and we are now looking to capitalize, hopefully, on the retest. Now we're still in that downtrend. Again, we're still trading the same pair and we're in that downtrend. You can clearly see that by simply zooming the chart out. Price has been moving sideways, but again, we are in the downtrend. We've had this nice bearish push to the downside and we want to catch the retest of this area if it breaks below. So let's see what happens. Okay, so price did break below and has formed this indecision candle. This candle has told us that price did try and break below and also try to break or push back to the upside, but failed to do so, and price is sitting around. We don't want to enter right now, we want to see what the next candle will print for us. The next candle, we were hoping to be a big bullish candle to show that the price is going to push back to the upside for the retracement, but it's not. It's even better than that. What this tells us is that over the last 4 hours, we're looking at the 4 hourly of course, the bulls have not been able to push price much higher than the previous high of the last candle. This is a fantastic sign that the bulls are not in this market. This is a simple closing of the sell orders. They're taking their profits and they're moving on. But what this is telling us is that this is still going to continue to the downside. We have arguably broken below. We've tried to push back up there by creating a retest, but we want to find out what the next candle prints, just for that extra bit of confluence to make sure we're on the right side of that market. Fantastic. This is what we call a bearish engulfing candle, in that this candle has engulfed the previous candle dramatically, and that this shows the bears are back in that market. A fantastic point in which we want to enter into a short position. So on the chart, we'll enter again our short position. We'll enter it as a market order. Stop loss we'll want above the structure, and again a nice 1 to 3. This works on any time frame as long as there's clear trends, but I like to use the 4 hour. It gets rid of the market noise. Okay, so a nice 1 to 3. Let's see how the market plays out. And there we have it. Simple break and retest. Price broke below the previous structure, gave us that retest, albeit a very small one, and continued again to the downside. The points being here, the key takeaway points that you need to know: trade markets that have a clear trend defined. There's no point in trading sideways markets. It is just a betting game of where the market is going to go next. You want to find those markets that trade nicely, identify the key levels. We could have ignored that, but we weren't. We were competent traders and realized that price respected this level previously, and we were looking for the retest of that key level. And then we wait patiently for the candle patterns and formations to give us that clue that we are good to go and execute this trade. Traders, I hope you enjoyed this video today. A very nice, clean and simple video on price action and break and retest strategy for anyone out there who needs a refresher, or for those beginners out there. If you are new around here, traders, we do have a Forex club called the Commitment of Traders Club. I'll link it below. You can see it on screen now, in which we teach you how to trade with the banks and really maximize your profitability and trading success rate. If you have any questions, I'll meet you over in the comments. But in the meantime, happy trading this week, and we'll see you guys in the next one. Let's go.